Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss booming versus busting markets, office building financing, and loans in forbearance. Today is Tuesday, April 18th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Thanks for coming back on this Tuesday to follow up yesterday's big day of daily download charts and graphs below. I think we had 11 yesterday. We have 15 today. So another packed show. We're going to break down markets. Hit the like. Consider sharing this with somebody who wants to know all things housing. And let's get right into it. Lance Lambert over at Fortune, who I just absolutely love. I've given him a shout out a few times. At News Lambert on Twitter is where you'd want to follow if you want to follow Lance. I'm going to break down two of his articles on Fortune that just came out, taking a look at pricing across the country. We are going through a bifurcated pricing situation here in the market for sure, meaning some markets are going to be dramatically different than others. Okay, first, let's start with the overall picture. Okay, and we've talked about it the last few weeks where Zillow and Black Knight, as well as CoreLogic, have all reported positive month-over-month home price increases this spring. So for the first time in 7 months, we've seen an increase in price. And those three in particular, we're waiting for Case Shiller here at the end of the month, but those three in particular have said they expect home prices to continue to go up. Okay. That being said, there are 24 national home price models that are forecasting an overall decline for 2023. It's not the three that I just mentioned who reported an increase last month, Zillow, CoreLogic, and Black Knight. Okay, but out of 29 national forecasters, 24 are predicting a home price decline in 2023. I'm not one of them, right? I'm on the train that, hey, we're going to have a spring where we go month over month over month of home price increases. And I think that will be greater than the home price declines that I do expect us to deal with in quarter four. Okay, I think quarter four is going to be tricky because of the recession, because of the economic uncertainty. It does feel like we're getting closer and closer to the eye of that storm of recession. Okay, out of 400, let's break down the overall picture on pricing. Then we're going to go to some very specific locations. Okay, so if we look at the overall top 400 or the nation's largest 400 housing markets, and we look at them over the last month, rather, we have only 23 that have shown home price declines. Okay. So we're seeing now, 23% saw a month-over-month home price decline in March. Okay, so far fewer than what we've experienced leading up the last 7 months. This home price correction is losing geographical steam. So the percentage of housing markets with positive or negative month-over-month home price growth. Okay, so you can see here 23% for March that saw that home price decline. Okay, so meaning over 75% of these major markets, of the nation's 200 largest housing markets registered this month-over-month increase would be over 75%. So in September, so 23% saw the decline. In September of 22, 79% right here in September saw a home price decline out of these 200 largest housing markets. So we've completely flipped where we are from the peak of mortgage rates, September, October, to where we sit today, albeit in the seasonal spring market. We're passing through this home price correction. So it's hard to see maybe, but you can download this chart. You can see that we now have a sharp line going in the other direction off of the home price decline and towards home price growth. Okay, so in March 2023, again, 23% were reporting this home price decline out of the nation's largest home markets. Okay, so another way to look at this, it's similar to this 2010 sharp decline. Now, many people that are doubtful of the housing market are going to say, yeah, you're going to see this in the spring, and then another sharp increase in declines in quarter four. I believe we will have an increase in declines in quarter four. I don't believe it's going to be this significant because we don't have a mortgage crisis. We have a mortgage update on forbearance is coming a little bit later in today's stream. But I do believe we will have a little bit of a recession back into declines before we have a 2024 and 2025 that are mostly home price increases. Okay. All right. So 1 month change in home prices, just looking at the country overall, most of the red or negative numbers in home price growth would be to the west. Okay. You do have a lot happening in central Florida as well, not South Florida or pockets of the panhandle, but you have a lot going on right now where there's inventory going up in the middle of the state in central Florida. And then most of the pockets of home price declines are happening out west, which we've known. And then you do have some pockets here in Texas. Northeast and what people would call, middle America, that is very blue, meaning home price increases. This is according to the Zillow data. You're seeing month over month home price changes of 2% or more in many of these markets in the Northeast, along the Eastern Shore, and in middle America, or I never understand why they call this the Midwest. It doesn't feel Midwesty to me, but those middle states, if you will. All right. If you're watching on YouTube, you can visually see what I'm saying. Year-to-date changes in home prices shift in home values between December 22 and March 2023. So a year and a quarter. Okay, according to the seasonally adjusted Zillow Value Home Index, which we reported on last week, the Zillow Value Index showed an increase month over month on home values. And so you can see here, again, for the last year and a quarter, the West reflects sharp declines in home prices. Central Florida as well. You've got some pockets in Georgia and the Carolinas here. And then you certainly have pockets in Texas and Louisiana. But middle America and the Northeast are mostly on the increase train. Decline in regional home prices since the respective peak. Markets at 0% they're at their all-time high price-wise in March 2023. Similar model here. Okay, so where the West, Central Florida, Texas, and then just some pockets, Georgia and the Carolinas, mostly. You've got Boston over there that has seen that as well. Okay. Year-over-year changes in home prices. You see most increases. Okay. So if you go year-over-year, Florida is all 100% on home price increases. The only place where you see significant declines is the West on year-over-year numbers. Okay. So year-over-year, everybody's still up. This one is really interesting. Remaining pandemic housing boom gains. Everywhere in the country, except for some pockets, 2 pockets in Louisiana. Everywhere else in the country, and listen, this is like, unfortunately, Hurricane Alley there on the shore. So I don't know if that has an impact or what's going on there, but remaining pandemic housing boom gains. Most of the country is still upwards towards plus 40%. Nobody out of those 24, or very few, I should say, out of those 24 price forecasters of the 29 that I mentioned is saying that we're going to lose 10% this year. Not too many people are saying that. They're saying that there's a pocket potential in a San Francisco or in an Austin where you might see that. But nobody's really calling for 10%. It's a lot of, averaging out to about 5% for those that think we're going to lose pricing. If you minus 5 from 40, you're still in a pretty good position there for someone who owned a home at the beginning of the pandemic, bought in early, or owned the home before the pandemic. That homeowner still has significant gains on their real estate. Okay. Now let's take a look at some regional. So the overall, the country is still way up pre-pandemic. You can see that the West, when you look month over month or year over year, is much more impacted on price than the East. The Northeast right now is pretty strong, but the Northeast does, typically lag behind. So what will happen in the Northeast as we go through a recession? Lance writes in a separate piece that things are getting really weird in the housing market. Let me know in the comments if in your own market you're seeing one county, because this is what we're going to start to dig into from one location to the other. If you're seeing one county react differently to pricing and inventory than the neighboring county, or one town or one city than the neighboring town or city. Okay. So housing affordability, according to Lance on this Fortune piece, has improved this spring. And he's comparing that to Q4 as the 30-year is lower than the 7.37 that we saw top out in November, because now we're sitting around 6.5. And yesterday, I know we were at 6.6, according to Mortgage News Daily. But the lack of sales, in my opinion, on those affordable ranges has actually not made it more affordable. Especially not if you compare it to the last few years and these low interest rates. It's made it way more unaffordable. I mean, you take that moment in time in November of 7.37, sure, but that's only one way to look at it. Okay, so when you look at each market in particular, and this is what agents and attorneys or real estate advisors, anybody advising people on the price of their home, need to dig really deep locally. Okay, because the country is divided not on what you're thinking, but on home prices. Okay, they are divided on home prices when you go from one state to the other, or one county to the other. And yes, you could agree that they are divided on those other issues as well. Okay, so let's take a look at these maps that show the change in home prices. This is, again, according to the Zillow Home Index as we go into each local market. Don says the markets are down to county and town level. It is dangerous to make sweeping comments about regions, and even price points are experiencing different markets. Yeah, absolutely. Don makes a great point there. Knowing how the inventory levels from, say 300 to 500 are reacting in your market in comparison to 500 to 750 or 750 to $1 million is going to be really important, because if you're talking to a buyer who's getting data on one segment or the overall, to Don's point, the overall market, but that's not reflective of the segment of the market that they're searching in. Say they're searching for starter homes, and it's like, hey, well, here in Texas, because Dawn's in Texas. Well, here in Texas, prices are coming down. Well, I'm just going to take a wild guess that if a starter home buyer sees those headlines, they're going to be looking for a deal. They're going to be looking for negotiation opportunities when they go home shopping. But on those starter homes, those competitive homes that are priced well, they're not going to get that chance, because I would imagine, and let me know if you're in Texas. I know Dawn is. I would imagine that on those starter homes that are well kept, that don't need a lot of work, there's still high levels of competition, because we have a large segment of buyers that need starter homes, that need affordable homes. Okay. All right. Now let's start breaking this up region by region. If you're in one of these states, let me know in the comments. Okay. And let me know if you agree with this map. This is according, again, to the Zillow Home Value Index. All right, so shift in New York home prices through the first 3 months. So we're looking at Q1 here of 2023. Okay, so New York, you see a lot of areas that are down. Northern New York, upstate, as they call it, is down over 5% or at 5% in many areas. Western New York, out by, going towards Buffalo, you see a lot of red, down 5%, or in some areas that dark red, which would signal even more than 5%. Then you go to Albany, which Albany is still actually considered upstate by many. This is like real. This is like Canada up here, the top one. But you go to Albany, that portion of upstate New York, you have a lot of deep blue. Blue on this chart is plus 5% in home values. So you've got somewhere between 0 and 5% increases. When you get to Long Island, you do see, especially on the South Shore, a lot of home values going up. You get closer to the city in Long Island, meaning, the boroughs of New York, Manhattan and the Bronx and Brooklyn, you see a lot of the red, the home price declines. You go out to the Hamptons, to the tip of the world on Long Island, you see a lot of red home price declines, reflecting a very hot COVID market. Okay, so it's scattered all over the place. Syracuse is up, Albany's up. Okay, parts of Long Island are down. The Hudson Valley, the Hudson River Valley, looks down overall. Most of those pockets, which is a market where a lot of people flocked to during COVID. Okay, let's go to Tennessee. Wow, Tennessee looks strikingly up. Okay, we're talking deep blue on this chart, which is 5% or more on home value increases in quarter one. That's a big increase for one quarter. Okay, but when you look closer at Nashville or Memphis, or even starting here in Knoxville to loosen up, Knoxville has been one of those communities that has boomed considerably over the last few years. But in these areas where you have the largest populations, you have the steepest declines in Tennessee. The rest of the state is obviously where you have less population. Chattanooga, cool little place. If you ever shout out to Doug Edrington over in Chattanooga. Let me know if you're in Tennessee here in the comments so I can give you a shout out as well. But if you're in some of these less populated parts of Tennessee, prices are going to be very competitive. They're going up. Where more people are, prices are going down. Nashville, Knoxville, for example, went up significantly during the pandemic. Taking a look at California, reflecting those national year over year and even month over month numbers that we took a look at, you have a lot in the West, you have a lot of red. So California for now this particular chart. Okay, so I'm sorry, Tennessee was not reflective of the New York one. This is for a year and a quarter. So I think I said quarter one, December 22 and March 2023. This is a year and a quarter. Okay, so that's what we're looking at here. Okay, so there you go. A year and a quarter. Same thing here with California. My apologies on that. Same thing with California. A lot of red. You have very few pockets where you see increases. Southern California is deep red, so large price declines happening there. Talk to a California agent. They still say that they have an inventory issue. They have a declining home price thing going on as well. Let me know if you're from California. What are you experiencing? What part? California is a big state. Overall, home prices are on the down in California. Ohio home prices. Okay, so this is the first 3 months of 2023. Okay, no, they're saying this is, I'm sorry, I'm flip-flopping here, but it's saying it's the first 3 months of 2003 on all these charts. Right at the top, shift in home prices, first 3 months of 2023. Okay, so there you go. It is the first quarter that we're looking at. My apologies again. Ohio, you see a lot of increases, and you even see increases around cities like Cincinnati. Dayton, you do see some home price declines. Okay. Columbus, you see mostly increases. And then the southern part of Ohio and northwestern part up by Toledo, you do see decreases, but Cleveland, you see increases. Okay. So a lot of their cities, unlike Nashville, are going up. And some of these more rural areas are actually where you're seeing the home price declines. So not every state is reacting the same way to rising interest rates, or the same way to inventory issues. These are very different. If you take Ohio and Nashville, it is like the reverse of each other of what's happening with where home prices are going up and where home prices are going down. Again, Georgia through the first 3 months of 2023, according to Fortune, okay? According to Fortune and Zillow Home Value Index, the data that they got there. If you look at Georgia, you see a lot of blue home price increases surrounding Atlanta, like real close into the city. But then all of the suburbs, which I imagine during the last couple of years exploded in competition and migration, are in that red category. The home price declines, everything surrounding Atlanta, but the downtown looks like they're still experiencing home price increases. Southern Georgia is where you're getting the most home price decreases. These areas here are very rural. You still see home price increases in Savannah. Cool little town. I stopped there one time. It's more, I think it's a weekend and you're over it, but some people love it. Augusta, where they just had the Masters, is kind of split between north of Augusta having increases, and then south of Augusta, you see a lot of red in here. So Georgia, another state where you've just got different pockets all over the place of home price increases and decreases. Florida, real interesting one here, reflective of the charts that we saw earlier, where Central Florida, basically the entire part of Central Florida, is experiencing home price declines. You see here, this southwestern area, north of where I'm sitting right now, north of Naples, and then all the way up to Sarasota. This is where Ian did the most damage right here. You see significant home price declines. I just spoke to an agent. Naples is separated. Naples got hit hard too. Naples is separated by 41, runs up the West Coast. Everything west of 41 is very, very close to the beach. And he works west of 41. Shout out to Dustin Beard from Ravis in Naples. He specifically works west of 41. He doesn't even work east of 41. He's like, man, you can't get buyers off the fence right now. They look, they want to buy, then they don't buy. And it's Ian that is lingering and creating these home price declines as properties in the market. You go east of 41, and you go between 41 and 75 in Florida and Naples, where I live, you're seeing home prices increase. And overall, Naples is not declining. You can see here that it's basically flat on prices. But when you go off of the water enough, 8-10 minutes, you see home prices increasing. You go into the rural pockets down here in South Florida, you see it increasing. Miami is still increasing. It's one of the hottest markets in the country. You see lots of blue in Miami. The Panhandle, you see deep blue and home price increases. You see Jacksonville, which Jacksonville had their best years ever during COVID. You see the declines happening now. And then the rest of the Panhandle is a little bit bifurcated, and you've got some different markets there. Okay, so overall, every single state, and let's just take a look at Texas real quick. Now we've got some Texas peeps in here. Texas is showing mostly home price increases, but I think Austin gets the big headlines where you see a lot of red home price declines. Houston, you see a lot of red home price declines, as well as Dallas. And when people report on Texas, those are the three areas, that's triangle here, where people are going to report on, where mainstream media is going to report on. But you look at the rest of Texas, home prices are actually increasing outside of a few random pockets. So Texas overall, you see home price increases. Where the majority of the people live in Texas, you're seeing home price declines, and also in the markets that got really hot during the pandemic. Okay, so every market's going to be a little bit different. Wall Street Journal had an article out this morning talking about Miami in particular. Miami market is starting to cool, but it's still the hottest around. Okay, so according to Wall Street Journal, Miami home price growth slowed but continued its ascent in the first quarter, fueled by persistent demand even as higher mortgage rates pull down. So we know that people are voting with their feet of where they want to live. Miami had the highest inbound migration Florida had the highest inbound migration last year, almost a net migration of almost 400,000. No other state experienced anything like that. And median prices in Miami-Dade County rose 5.2% just during the first quarter. So up over that 5%. We just looked at the chart from Fortune. That would reflect that. Compared to the same quarter last year, according to Ron Sheffield, who's the president of Berkshire Hathaway Home Services EWM branch. The gains offer fresh evidence that Miami's housing market is poised to remain the strongest of any U.S. city. A lot of the forecasters who have broken down, we've gone through this on the hot sheet, have broken down city by city what they think the forecasts are going to be for 2023, believe that Miami is one that is going to have the biggest gains. So I would agree that, yeah, you're gonna see a strong Miami for quite some time. The gains offer this fresh perspective. It's going to be one of the strongest gains, right? Miami posted the country's fastest year-over-year home price growth at 15.9% last year, according to Case Shiller. So most people were under, most markets were under that. Housing prices in South Florida have been reset to a higher level, according to Douglas Elliman. Okay, and we saw that in the chart where, southwest corner below where we looked at, the impacts of Hurricane Ian were flat. To the east, Miami was up. Central Florida was down on their home prices. Okay, so looks like every single market is different. When you look at Miami, that's not going to be reflective of the entire state of Florida. Just like when you look at Nashville, that's not going to tell you the whole picture of Tennessee. So the big takeaway here is really dig deeper and deeper into your particular market. Know what those price ranges reflect, how they're reacting to the market. Like Dawn said, know from town to town what these home prices are doing. Is inventory going up in this town but not in the next city? Are prices actually declining over here on the east side but going up on the west side of your area? People are going to see headlines, and there are going to be pockets in your community that are completely opposite of the headlines, because we just looked at, half a dozen to a dozen different states in America, and every single one's painting a different picture. Every single one has a different story. And when you go more local, they're all changing, and they're all very different from one another. Being the person that can articulate the changes in your market, if you're dealing with the public on their housing decisions, is going to be very important as we move through this spring market, because even month over month, things are changing. For the first time last month, we saw overall in the country home prices increase, but that may not be the case for your market. What is likely the case for your market and almost every market in America is that office building owners are going to have a really hard time collecting financing. Okay. Office building owners are snubbed now by life insurance lenders, according to an article today in the Wall Street Journal. Life insurance companies, until recently a reliable source of capital for commercial property developers, are turning their backs on office building owners as tens of billions of dollars in office loans come due this year. We've talked about this a bunch. In fact, Janet Yellen said that one thing she thinks, is going to happen the rest of the year is that credit is going to tighten up even more. Okay, so is that going to impact the residential, lending, or is credit going to tighten even more when we know we're very strong? And I have a forbearance report to showcase that in just a second here. How much of this credit tightening, how much is this going to spread? We know for sure, people that are lending to office buildings are going to be very cautious or stop doing it altogether. Okay, I am not bullish on office buildings at all. I think there's been some new projects where the developers have either gotten lucky or are just so brilliant they were able to forecast into the future. But a lot of people who invested in office buildings the last 5 years are going to be in significant trouble as the next 5 years plays out, and as a lot of these loans become due, and as the credit tightens for their ability to refinance these projects is going to shrink dramatically. Okay, so many of these insurers have slowed or stopped making office loans altogether. Executives and analysts say interrupting the sector's decade-long expansion to commercial property lending for these insurance firms. Insurance firms have tons of money. Okay, I think they're going to probably still lend out on multifamily, so they're not going to stop all commercial lending, but they should, and it sounds like they are shying away from these office buildings. Insurance firms have become skittish about rising vacancy rates and falling rents, reflecting the growing popularity of remote work and return to office rates that are still around half the levels workplaces enjoyed during the pandemic. We shared those numbers and those charts on yesterday's hot sheet. So if you missed that, go take a listen or a replay on YouTube. We shared all those charts in the daily download, which, by the way, all the charts I just went through are available in today's daily download. One link and you get them all. February survey by Goldman Sachs Asset Management found that 15% of insurance with commercial real estate lending businesses said that they plan to shrink their activity this year, more than 3 times as many in the same survey last year. If somebody comes to you and they're thinking about buying an office building and they've never owned office before, they're like a first-time investor and they want to get into office building, you need to really educate them on the reasons why they should run and think about another asset class in real estate. If these insurance companies are running, that tells you everything that you need to know about that asset class in the future. And that is likely a bubble during the recession that will burst. What has not burst, despite many people rooting for it and many doubters saying that this would happen, is forbearance loans turning into foreclosure. The share of mortgage forbearance decreases to 0.55% in March. It continues to shrink. Okay, this is according to Mortgage Banker Association. Their monthly loan monitoring survey revealed that the number of total loans now in forbearance decreased by 5 basis points from 0.6% of servicers' portfolio volume in the prior month to 0.55% as of March 31st, 2023. 275,000 homeowners are in forbearance plans. That is not a lot. Okay. Mortgage servicers have provided forbearance to approximately 7.8 million borrowers since March 2020. So out of the 7.8, you've got 275,000 less. Job market is still very strong. Wages are up over the last couple of years. And what we've seen is that a lot of these banks are able to create a plan. When you've heard about the 40-year mortgage, it's only for people that are like kind of redoing their mortgage. And so some people might be putting on a 40-year mortgage, and that's a way to decrease the overall payments right now, obviously, for some who want to remain a homeowner. In March of 2020, the share of Fannie Mae and Freddie Mae loans in forbearance decreased 2 basis points to 0.2%. 2.6%. So it's just looking at Fannie and Freddie. And I have a chart here, and that'll be down below from Mortgage Banker Association, the percent of servicing portfolio in forbearance by investor type. So it looks like that Ginnie is the is the most vulnerable here in the blue line at 1.18%. Then you've got PLS second, and Fannie and Freddie are doing the best. So most people have a Fannie and Freddie, and they don't have much exposure there at all. Okay. That'll be linked down below if you want to read more about that. It shows, and we've talked about this, where foreclosures are at an near all-time low, and now forbearances continue to shrink, which shows that the mortgage market, the residential mortgage market, is incredibly strong in America right now. That's not the picture on the office loans. Okay. So is real estate going to have some type of bubble effect in a recession? Maybe on the office side, maybe that's the next bubble to burst, but it's not going to be residential home loans. Incredibly strong. And the data continues month over month to point towards that. We've really fixed a lot of the problems from that 2004 to 2007 era. Let's see if we're going to have a problem today with the 10-year. Looks basically flat. We're at 3.576. We're down a tick. Yesterday, we were up a tick. I thought that we might, unfortunately, go up on the 30-year fix yesterday, and that's exactly what happened as we close out the day back up over 6.5 to 6.61. That in our research, who said we're going to be down below 6.5 for the foreseeable future, needs to dust off their crystal ball. I don't know where they got that in these volatile times. Every single week is different. We're back up over 6.5 right now. Hopefully with today's downside on the 10-year, we might get back closer to 6.5. That remains to be seen what happens with the rest of the day. Where you should spend your day on May 5th is right down here in Naples, Florida with me, the broke agent, Danny Deals, Ken Pozak, and Bobby, our lead producer at BAM, who puts this show on every single day for you. Although yesterday it wasn't him, it was Cooper. Shout out Cooper from BAM. And you should spend that day May 5th with us. We have a BAM mastermind. We're going to build a personalized plan for your Instagram. Okay. Then we're going to move to YouTube. Ken, who's got the best YouTube channel in Orlando for any local real estate market, is going to build that personalized YouTube plan for you. And then Bobby's going to work with you on a plan on how to get the editing done, whether that's in-house or outsourced, how to manage that entire process so that you can execute on your new Instagram and YouTube plan. I'm going to be there with you all day, whether you want to talk business strategy, team building, or branding, or any other question that you have about the real estate industry. And then we're going to spend the afternoon playing a little golf and masterminding a little bit more on the golf course, ending the day with drinks on the patio at the Tiburon Ritz-Carlton in Naples. This is an all-inclusive event designed specifically for someone who wants to take their brand to a 10x level in 2023. Later today here on the channel at 2 p.m., be premiering the Real Word podcast. Got a lot to discuss there with myself and Nicole White. So make sure you are subscribed to this channel so you don't miss it. Hit the like on this video. Appreciate you making it all the way till the end. Consider sharing it with someone who wants a 24-hour look back on housing. And tomorrow I'll see you back here live at 9:30 a.m. Eastern or 6:30 Pacific time. Until then, toodaloo.